The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 7th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. Hope everybody had a great weekend out there. My outcome as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, it's something you and we must master each and every day. So let's begin our day with an empowering belief about building exceptional relationships. You know, building exceptional relationships boils down to four fundamental elements. Element number one, if you want to touch someone, express sincerity from the heart. When you try to impress, you build a gulf, but when you express, you build a bridge. Always express versus impress. Element number two, positive influence. Positive influence can have an incredible effect on your life, but so can negative influence. Both will take you somewhere, but only one will take you in the direction you truly wish to go. Element number three, if you're full of ideas, pour them out, as I say, because as you do, more will be poured in. This I can promise you. And element number four of building exceptional relationships, if you want something badly enough, you've got to pay for it. Why? Because of the kind of person paying for it will make you. If you pay for something, guess what? You will pay attention. So always express versus impress. Choose to be a positive influence. Pour out your ideas and pay for the things you want, and you will build exceptional relationships. Let's go check out the exceptional relationships inside the market. Right now, we've got the Dow off 102 points, trading out at 14,970. S&P off 9 at 1681. NASDAQ is down 16 points at 3791. Russell 2000 off 8 points, leading the charge to the downside, down 0.7% out there. NASDAQ 100 down 0.3%, not too bad, only off about 9 points or so. New York Stock Exchange is is just drafting the Russell 2000. That's down 0.6% out there. Our call number is 877-927-6648. If you give us a call, be happy to take a look at your stock chart. We got gold up $13, trading at $13.22. Silver up 2.5%. A 53-cent move this morning so far. That's trading at $22.29. Light sweet crude off $1.67. We've got the ES Mini right now trying to take out a resistance area on that 30-minute chart out here. So we're going to start off by taking a look at the ES Mini. We had this nice little wide-ranging bar to the downside. We had that took place here at 3:30 this morning as Europe was opening. Speaking of Europe, let me go take a peek over here, and we got the DAX. That is well off of its session lows this morning, now only down about 24 points on the FTSE off 21. Let's actually go over and take a look at what the stock chart looks like inside the DAX and inside the FTSE, see why they are partying out here. Well, the FTSE, we know why the FTSE, where that is finding the bulls hanging out, and that's got three hammer candles. Holy schmoly out here. Take a look at this. First hammer candle inside the FTSE is on August the 20th, the low of which is 63.98. A little bit of change. We did see a tad of a close below that on that very next trading session. A little bit of a bullish reversal signal that took place on August 22nd. But we had another hammer candle that came in on August 28th, the low of which is 63.93. And then if we slide all the way over the right-hand side of the chart, we see another hammer candle here on October the 2nd. That was being tested this morning. Heck, we might have 1, 2, 3 by the time this trading session is done, a fourth hammer candle out there. Today's right now is a little bit suspect, but a little bit of a move higher. And I can't tell you why, but we can tell you where the bulls are hanging out inside the FTSE. That's going to be somewhere at the price level of around 63.98-ish out there. We do see a break below that. That will give way to you've also got this gap. So if we take a look at the, let me put another red line out here. the kind of red line that we do pay attention to. That's the red line that was created on July the 5th. That was a gap up there. So you had a nice sign of strength inside the FTSE. Now I have to move that red line up a bit in order to take a look at the gap out there, but that's not a big deal. So we can see some pretty significant support inside the FTSE, anywhere from the low of 63, 64-ish on July 5th to those hammer candles out there. That's where the bulls, in fact, are hiding out. Can't tell you why. We just know where, in fact, they are hiding out. And so far, they've done a great job of defending that territory. We go take a look at the DAX. Let's go see if we can find any bulls hanging out or bears hanging out inside the DAX. You can see the DAX here well off of its session lows. In fact, it looks like the DAX here wants to turn positive. Well, it's got a little ways to go because of the close on Friday. Not a bullish candle yet here. In fact, the least bullish of bullish candles. But what the DAX did do is it came back and it tested the gap. So let's take a look at that. You had a gap up on September the 16th out here. That was probably courtesy of Larry Summers, as I recall. But take a look at what the DAX has done is come back. I wish I had the volume for the DAX. I don't. But if we do take a look at the bottom of the gap, that's going to be your high from September 13th. That's at 85.18. What the DAX here did this morning is it came back, tested that level, got down to 85.10, has rejected that price out here, and so the DAX is saying, no, it doesn't want to break down. Boy, these markets out here, they are just simply amazing. So that's on the DAX. Let's go, as long as we're over here, let's go take a look at a couple of the other charts. Let's take a look at the Nikkei, see what it is doing out here. Nikkei pulling back to the, looks like I got the wrong Fibonacci out here. Let me take a look at this. Let's take a look at the Japanese Nikkei out here. Close to pulling back to the 0.618, which would be 13,810. Actually closed at 13,853 out there, but kind of a wide-ranging bar coming into that area. Looks to me like what the Nikkei ought to do, just like the DAX did, is come back and test this little open gap that it's got from September 3rd to August 30th, the low of which is 13,748.60 out here. We'll see if you start to see a reversal from here, whether it's tomorrow or it is the next day. What I would say is that the smaller Gartley buy pattern, that's the blue shaded pattern out here, that actually is in effect, and what we would see is we'd see 2A to B equals C, the upside could be forming inside the Nikkei. So one takes us to 15,729. The next one, as soon as I hit the right button here, the next one could take us up into about really the same level-ish, 15,478 to 15,729, maybe even to 15,900 out there. So an important level of support inside the Nikkei is going to be the low of the trading session of September 3rd. It closed inside that bar. I suspect that's an area that will be tested. Of course, finally coming back online, I don't know what the holiday was over in Shanghai. I don't know. I actually don't know what that holiday was. Somebody in the den probably does. But we can see it has not been trading here for a good period of time. Looks like for a week. So now what the Shanghai, this could set up a nice potential trade if in fact it opens come Golden Week. Thank you, Z in the den. So it was Golden Week out here. And we'll see if this is going to come and test the bottom of this rising price channel out here. So they've been closed for a week. We'll see if they're revving up and if they're going to be golden and be bullish or just what they're going to do. But they have been closed all week long is what it looks like on my chart. Yeah, because the last actual trade out here was September the 27th. Yeah, September the 20th. Maybe there was trading on the 30th, but they were closed. They've been closed for a while. Let's take a look here. What else do I have over in these charts here? Looks like the Hang Seng. If I do take a look at the Hang Seng, not a real big deal out here. The Hang Seng could be forming an A to B equals CD down. This would form a Gartley buy pattern. Your A point on this would be September 20th high. Your C point would be October 1st low. So it looks like the Hang Seng. So the Hang Seng, they've been trading in Hong Kong, guys, and not over in Shanghai. The Gartley pattern here, if we take a look at the retracement off of the lows from August 28th up to the high that was put in on September the 20th, you can see the 0.618 retracement level brings you to 22. 263. You've got a nice 1 to 1.272, A to B equals CD, right around the 22,339 level. So that would be a nice little buying pattern potentially inside the Hang Seng in the marketplace. Anyway, let's go back and take a look here at the 30-minute chart. Then we'll go take a look at the index. So the reason I want to take a look at the 30-minute chart out here is because a significant area of resistance has been taken away, has been moved through by the bulls. That was that downdraft from 330 that was led by the European markets out there. The high of that was 1673. You're trading at 1676. Still 14 minutes left in the trading session. Volume on that downdraft bar, though, that was 26,000 contracts. Right now, it's being taken on with 115,000 contracts. So what does that set up? Well, it sets up at a minimum, at least moving up into the resistance level, which with this wide-ranging bar here would say, to me, 1683 is where it would head to. That's assuming it can close above that resistance level in the next 14 minutes of the 1667 area. No real A to B equals CD pattern that you can see here. So we've got a 0.618 level at 1678, but you're coming into it with a fairly wide-ranging bar, some accelerated volume out here. It can certainly move higher. I suspect that it'll find we're in a trading range. It's as simple as that, and it's a decent trading range. It is a trading range that goes from about the 1663-ish level, mostly to 1683, 1685, as high as 1690 out there. But really just been inside a trading range for a while. Maybe we're going to be inside this trading range here for a while longer. Let's go take a look at the daily indexes, though. Let's go see what we've got going inside the S&P 500. Right now, that's trading out at 1682. What the S&P 500 did on Thursday was came back and tested the gap that was created from the September 9th to the September 10th trading session out there. That held. You did have a nice bullish candle here on the daily chart for the S&P 500 on Friday. We're going to see today whether or not that bullish candle is going to, actually, it wasn't so much a bullish candle. Let's just say right now the key area here, because it was this hammer candle that it broke through, we'll give the hammer candle a little bit of credit, just like we did on the FTSE. So you had this hammer candle that actually formed on October 2nd, the low of which is 1680.34. You're at 1682.41 right now. So we'll say as long as the S&P closes back above the 1680.34, just like we were looking at inside of the FTSE out there, we'll have that act as we've got really two support levels inside the. Well, you have three support levels. A third support level, four support levels. Okay, so let me identify those support levels for you here. One, you've got the gap from September 9th to September 10th. Second, you've got the 0.618 retracement level right around 1667. Didn't get all the way down there. Got down to 1670. Close enough for me. You got that hammer candle that formed on October the 10th. That price is at 1680.34. Those are your throw. And then you got the rising price channel coming off of the November 16th area out here. So you've got some really strong support. And, of course, if that support ever gives way, look out, folks. That'll be saying timber down below. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 72. S&P is down 6. NASDAQ off 9. If the markets were to close here right now, you'd have a fifth area of support inside the S&P 500. It would form a hammer candle. So, a lot of time left in the trading session. But if you had a close here, probably I'd say anywhere in the range of 1684, 1680, probably about 1683.75-ish. Assuming there was no other spike higher today, that would be a hammer candle. If in fact you closed up at its session highs, this could probably form a hammer candle. See, the high today so far, the open was at 1687. So probably from 1687 to about 1690, 1691 maybe would be where this thing could form a fifth area of support. Telling you that the bulls don't have any conviction behind any of the moves, but most certainly when it comes to defending territory, it's very well defined. The area of support that they are holding. So, that helps you in your trade, and it especially helps you in a market like this. It's just so important to be able to take a look at a stock chart and identify. The first thing you got to do is take a look at areas of support and resistance. Well, the very first thing you have to do is look at volume. Step by step, the very first thing that you must do on any stock chart is to go take a look at the volume, and on those volume bars, see if you've got wide price spread as well, because that'll tell you whether you've got big buyers, big support, or big sellers inside a market. Then you want to go and take a look at areas of support and resistance. Inside the S&P, we've identified, in essence, 5 areas of support out there, and those are important because when those areas are broken, they are providing a ton of information that the bears would have broken the back of the bulls out there. Then you got to look for the next logical places of where support is. Inside the S&P 500, that's pretty simple because you would come all the way back down to the swing point from August the 28th out here. That would be in the range of about 1627, about 1641. But right now, the bulls are just simply not pushing the markets higher. And what I mean by that is if you go take a look at Friday's action, let's just do that by taking a look at the SPYs here. You had a nice move higher price-wise inside the SPY. It was inside the SPY that had that bull sash candle out here. And, however, the volume to the downside on Thursday was 176 million shares, and the volume to the upside on Friday was 96 million shares. I don't think so. Not a ton of conviction. Now, this morning, as long as we're here inside the SPY, well, we can see that it has tested and has held that important rising price channel. That's the rising price channel coming off of November 16th. So we can see intra-session, price has pushed through that area, but price is back up above that diagonal blue line out there. And as long as that's the case, the SPYs, they still have that confirmed A to B equals CD up 178.29. That would take price right into the rising price channel out there. So far, so good on the bulls' ability to go ahead and keep and defend their support position. Let's go take a look here at the strength inside the marketplace. Let's start off by looking at the Qs. Let's go see what the Qs here have done. Then we'll go look at the NDX 100. We'll switch over to that. As we take a look at the Qs, really a similar type pattern, meaning the move down, which was a bear sash candle on October the 3rd, 42 million shares. So it had volume. It had accelerated volume, but it didn't really have wide price spread. The Qs went from a low of 78.30 to 79.72 out there. Not really wide, no wider ranging bar than many of the others before it. So no wide price spread out here. And in fact, the very next trading session, which was on Friday, albeit not a bullish candle out here, but it pretty much erased that bear sash candle. However, the volume to the upside, no real conviction behind the move. Of course, the Qs don't necessarily need conviction behind the move to complete its A to B equals CD up because it already had that conviction. Because the B point is August the 5th, 77.08, 15 million shares, and the B point was crossed with 25 million shares. So the conviction that it needed, it got. And it didn't get it from Uncle Ben. It got it just simply back on September the 9th out there. So that is the Qs have got the A to B equals CD up. 1-1 takes you 82-83 out there. And I would say the confirmation that will take place is you've got the small little doji candle from September 19th, the high of which is 79.68. So it's really 79.68 that becomes your resistance area. And any close above that, let's see, you had a close of 79.68 right on the penny on October 1st. 79.68 is not a close above 79.68. So you get a close above 79.68, and it looks like 82.83 would be next on the horizon for the Qs out there. And we know that we want to really pay attention to the S&P because that is doing such a good job of defending the lows inside the marketplace. In fact, next time down there would really provide you with a really good buying opportunity. Because if they just simply can't defend that, then you would flip your position to the short side. So we know where the bulls are hanging out. No bull, folks. 877-927-6640.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is off 75 points right now. S&P is off 6. I mentioned we would take a look at the NDX. I can give you the numbers on the NDX as well. So as far as the resistance really on the NDX, it's nothing more than the candle session from Thursday. So it closed above that session high of 32.54.91, and that sets up the move higher for the completion. Now we can see it's just a sideways market that we have been in inside the NDX. Really, I would say, you could say it's really truly sideways since that September 18th time frame. However, close above resistance. That's the resistance points inside the NDX. It's the October 3rd high, 32.54.91. That sets up the move to 33.79 in the marketplace out there. That's what we're looking at. And until the NDX, until the composite, until the New York Stock Exchange, quite frankly, I mean, it can just kind of go down one after another until they show some weakness. Inside the composite, we take a look at that. That has resistance by this bear sesh candle from October 3rd as well. The high out there is at 38.16. All that we've really seen the composite do is just work off a little bit of that overbought condition out here. So that's got room to run higher. If I take a look at the VIX, I want to take a look at the VIX. I saw a couple of folks inside the Tiger's Den talking about the VIX index. So let's go take a look at that. Let's go see what kind of candlestick charting week the VIX, what kind of signals that is providing to us. And folks, if you haven't had a chance to check out the Tigers Den, you really should out here. You know, there's just no question. I know that each of us know this to be true. At times in our lives when we've had to pick up our game, the easiest way to do that is to change your peer group. And there's no better peer group than the Tigers Den. You get to see also all of our charts in HD. So we're looking at a chart here, the S&P 500. That's on the bottom. You've got the VIX index on the top portion of the chart. And I think the most important candle to be paying attention to inside the VIX index is this shooting star candle right here. That's the candle session from August the 30th, the high of which is 1781. Now, today we saw a gap up above that level. So you've got a rising window, a gap up, and as long as price stays above 1781 you can see is acted as resistance. The last two trading sessions, that level has been tagged and acted as resistance. So I usually say three tests are what you like to see in order to firm up a support or a resistance line. You know, with the VIX, we'll go with 2 out here. And if we take a look at that, you can see on Thursday, it tried to take that level out. It got up to a high interest session of 1871, closed out at 1767, and acted as resistance. The same thing on Friday's trading session, got up, tagged the high, traded lower, but today we have gapped up. So it's going to be important to pay attention to where the VIX closes because, you know, as the VIX moves higher, that's the volatility in the marketplace to just send the markets lower out there. If we take a look at retracement levels from high to low, the high right now just simply being the June 24th high down to the low that was put in on August the 5th. You'll see at 1975 is your 0.786 retracement level. That's the next target zone, so long as the VIX stays above the high of August 30th out at 1781 out there. Let's take a look, see if I can, let's go look at the New York Stock Exchange, see what it is doing out here. So let me switch over where we got there. We got right here. And today inside the New York Stock Exchange, let's take a look at this candle setting, this candle session, I should say. So the candle session out here, you know, you've got this gap that it has tested. Looks like it's tested, yeah, which is the low of September 10th. So 95.78 is the number. We got down a couple trading sessions ago to 95.76 and a quarter. That level held. Let me put a line across here so we can see we've seen really one valid test. But with those gaps, what I have found is that you need to be willing to move the line up and down a tad out here because that gap up, that's just simply telling you where the area of strength is and if you can move the candle up and down. So I'd say we've had 3 valid tests of that gap up. Today's trading session, if it were to close out at 96.35 or 96.27, you'd have a hammer candle at an area of support out here. Now, if it closes at that level, we're still not going to have enough net advancing issues to turn the oscillators positive, so we're going to have a market that is somewhat confused out there, at least with regard to not being, I don't know, what's the word I want? I don't know. Synergistic doesn't sound like a real good word out there, but where there's no, just a market that's confused. How about that? I don't think it gets to, maybe I don't have to really complicate it. In any event, let's go take a look at a couple of these other stocks out here. I want to take a look at IBM and now see how that is holding up this morning. That was testing the bottom of the bottom of the support area of a large consolidation level, and so far that is holding. What you'd really like to see is you'd like to see it close back above. This is from the bullish side, and the bearish side, it's going to be the flip. If IBM closes above 183.47 today, and it can do it on less than 3.9 million shares. So far today, it's done 1.2 million shares. It's got a bit of volume for an hour's worth of trading. But if it just totally dissipates, which is a possibility, and it can close above the trading session from August the 28th, again, that high is 183.47, you will have a rejection of a swing point on lighter volume, and you'll also have a rejection of that 30-point consolidation. And your back would be up against the wall. That would actually be a go long trade versus a short trade. Now, if it gaps down below that area, you know, all bets are off. But you are up really, your back is up against the wall here inside of IBM. And if you're just looking for an additional confirmation signal, actually a close above 184.96 would actually be even nicer. today, but right now it's trading out at 183.22. So you'd have to see the Dow totally reverse its losses here altogether. But, pay attention to IBM because it's up against that support level. And speaking of stocks that are up against support levels, that's not a bullish candle we were looking at, by the way, just colored green. But let's take a look at ExxonMobil because that, too, is up against a support consolidation level. Hasn't hit it. Now, in order for this to truly get bullish, it's really going to have to blast off out of this area and get above the swing point that it's testing, which is April 17, 2013. Now, that swing point has 17 million shares, a little bit more than 17 million shares, and prices pulled back into it with 11 million shares from October 2nd. October 3rd was 13 million shares. You tested that area and rejected it on the trading session with 11 million shares on October 4th. Today you're inside it with 2 million shares, a little over an hour of trading, not enough to bust it down. So ExxonMobil, although ExxonMobil doesn't have any bullish candle, well, it's got a bullish engulfing candle that took place right here, this body wrapping around these two little dojis out here. But since the bear sash candle kind of evaporated that, doesn't really have any bullish candles per se just yet. But it is up against a important level of resistance, or support, I should say, and that's in ExxonMobil. And it's also coming from an area of being in the extreme oversold territory out here. So that would bode well for maybe something like the DIG, or just simply bode well for ExxonMobil out here. But we could just be in such a trading range, folks, without anything being resolved in Washington, D.C. out there. In any event, let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you today?
Okay, Steve.
Excellent.
Could you take a look at the mini S&P?
Yeah, absolutely. Are you in a position looking to get in? Tell me.
I'm looking to get in.
Here's what I would do. I wouldn't get in anything now. At the bottom portion of my screen, Lou, it's got another version of the relative strength index that I use, and you can see it moved up into the real extreme area. This is going to be tricky to play. If you want to go long, what I would do is there's enough volume that pushed down into that swing point at 3:30 this morning, and there was 26,000 contracts. You want to see the ES Mini come back into that on less than 26,000 contracts. That's just simply if you're playing swing points. If it's coming back in with more than 26,000 contracts, what that says, Lou, is it should go down and test 1666. And if it can go down there, then what you might have really just had is an A to B equals CD down. So, we took a look at the VIX, and the VIX was above an area of resistance, and that's not bullish. That would be bearish. So what's transpired thus far inside of the ES Mini is if you go to the trading session high from 2:30 in the afternoon at 1686 on Friday down to the low that was put in at 3:30, what the ES Mini has done is made a 0.618 retracement. And that always says, Lou, that can make an A to B equals CD down. An A to B equals CD down would take you to 1659. Now we're talking about a pattern that may be worth buying out here, because that looks like that would set up a butterfly pattern. And I'll go ahead and I'll paint that in on the screen here in a moment. So that would be, I would rather trade a pattern. Right now I'm just giving you something where the ES Mini is trading to. I am not in a trade. I was short last night. I didn't come short last night right at the open. I waited for it to bounce back, and then I went short at 1677. Then I got out of my short position this morning at a price point of 1669.50, I believe it was. So I'm flat right now. So that makes it a little bit more difficult for me to actually, because if I saw a trade, I would be taking it and I would be in it. So, the better trade would be if you get this butterfly pattern down around the 1657-ish type level. So that's,
a Bradley move coming in tomorrow.
A Bradley turn date.
Yeah.
If I go, so just to, so you brought up the Bradley, and I make myself aware of it, but let me switch over to the Bradley model for us to take a look at, Lou. And so thanks for bringing that up. Now I just have to find it. It's
and also
right here.
In the Elliott wave, there's a turn date tomorrow.
Turn date. So and it would look like right now, because I'm taking a look at the Bradley model, and it's got the Dow. So the candlesticks on my chart are the Dow, and absolutely this is the Bradley model, and it shows that the market should be making some kind of a low right about now. So that's the turn date.
Right.
That's it. Yeah. So now the problem is that the Bradley model hasn't really worked that well.
Yeah.
You know, if we keep the Bradley model as we have it on my chart, and we don't move it right or left to try to line it up with a market out here, as far as moves that were put in, it's not really lining up that well. Now I can go inside the model and try to move it, to see if it's off, because the Bradley model, Lou, is more of a guideline than something that you would just totally hang your hat on. And I don't know that I haven't seen that it necessarily moves on the day. It's just kind of a range of an area. I would need to see some other patterns. You would, if this is going to be a turn date, one thing is for sure, you're going to see some kind of bullish candlestick configuration. And we just haven't seen that. We certainly haven't seen that inside the Dow out here. So you'd want to see that bullish reversal, in my opinion, in the Dow. Even though it's only got 30 stocks inside there, it still is the weakest index, and you should see some kind of bullish reversal signal come from the Dow. And if we take a look at the Dow from low to high out here, the retracement that it's done the 0.786 area, but no reversal signal out here. That's what I would be waiting for out there. So I hope that helps you.
Yeah, sure does.
Okay. Hey, thanks so much for calling, Lou.
Yeah, bye-bye.
All righty. So, folks, if somebody's calling or asking me about a trade, especially something that I'm trading all the time, which is the ES Mini, I was in a trade last night. As I say, I can show you the trade. I can actually put it up on my screen out here. This is one of the tools, one of the systems that I taught folks at the Master Trader Series. And I'm not going to go into the details of how to trade this strategy, but I can tell you that I have back-tested this strategy over a series of thousands of trades, and it produces incredible results are out here. And if we take a look at this trade, I'm just going to blow it up. This is where I got in on the short side. So, it's a trading strategy. I've tested it. I've now got it giving me the signals when to actually go ahead and take the short side or the long side. I don't have a long side signal at all. I did have a short signal that came in at the close at 3:30 in the afternoon on Friday out there. I'm not going to go ahead and pull that chart over there. But you can see here I had the signal to go short at 1677. And so I went ahead and took that trade last night. It gave the signal to go ahead and get out of that short trade, and that was right down here at 5:15 in the morning. Now, I did not take that trade because it actually hadn't rolled out of bed at that time, but I did go ahead at about 6:15, and it was right in this 1688.50 range here where I went ahead and I took the short trade off at that stage. So it was a nice little gain out there. And I was looking to come back in on that short trade at this wide-ranging bar candle out here that came in at 3:30. But I was looking for some kind of rejection there, and we did not see that. So therefore, I am totally flat, and I've got no problem being flat in a market. You got to take the trades that give you the best reward to risk and just stay inside your trading system, whatever that is. But just make sure that you have a trading strategy and a trading system, and you know what that expectancy is. Makes it easy to go ahead and take the trades. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Lou had mentioned the Bradley model, and it's a great book that you can get. It was a book in 1946 titled The Stock Market Prediction by Donald Bradley. He goes into the science behind the book, which was the premise that they had planetary pairs such as Venus and Uranus, and that each planetary alignment had either a positive or a negative bias in the market. Now, the cool thing is that you've got all these planetary pairs. They can go out thousands and thousands of years. So inside of the software, the Ensign Windows software that I'm using out here, it's very easy to go ahead and apply the model to any stock chart that I've got out here. And what I have determined, what I have found, and then I think that Donald Bradley would tell you the same, and that it's really best to be used as a guideline for trend analysis too. You know, what a lot of times people will do is they'll take a look at the Bradley model. That's what we're looking at on my screen out here, and you'll see this thing made a significant high. The model itself made a high right around the May 31st area. And if you take a look at the high, the blue line, the squiggly line on my screen, down to the low, you would think that it was like predicting a market crash or something like that. It's really just a trending indicator. It's not giving you any type of price projection as far as what the market will do. It's really meant more as a trending indicator. And if it's working, then that's great. And if it's not working, you've got to use some other model that are out there. And there's plenty of models and strategies. I just shared with you a strategy that I used to go ahead and enter the short position inside the ESPN. Now I've got some clients that went ahead and used that exact same strategy to get in and to go ahead and get out of the market. You're better off with a trading strategy, any trading strategy that you can go back and you can test it and you can prove that it works. And when I say prove that it works, I mean it takes every single trade out there when they occur. I have found that when you can get rid of the subjectivity, when you can get rid of the gray, and then you just simply trade like a machine. Larry coined it the best in his book, Trade What You See. If you just simply trade what you see and don't try to second-guess the market out there, especially if you got a strategy that makes money, then it just simply becomes a money machine out there, and just trade that strategy. Everyone would be best off investing time. The first show that I opened, I talk about the importance of perseverance. This show I talked about just simply building relationships, but perseverance, especially when it comes to trading, is perhaps the most important aspect out there, because you've got to persevere, you've got to push through, and just go find your trading strategy, whatever it is. Find something that appeals to you. Maybe it's Gartley's, maybe it's butterfly patterns, maybe it's just coming back into swing points, maybe it's some of the tools that I trade or teach out there. But go find something and then go do the work. Go do the work and create your own money machine. In my opinion, the benefit of everything that has occurred inside technology has been the ability for folks to really get in on this money game, this money business that is out here. We have seen the stock market come back to its highs. You've seen companies making all kinds of profits and folks doing that on less and less labor. The biggest gift that you could give yourself and one of your kids is to teach them about the stock market and patterns, and go out there and find strategies that you can test that are somewhat bulletproof, that will produce a profit for you like any other business that you would run, and they can produce a profit for you at the end of the year out there. That's the real business opportunity that exists inside the marketplace. The next opportunity, though, that's going to be to listen to Basil Chapman. He's up next, and speaking of Larry Pesavento and Trade What You See, he'll be up after that. Then we got Daryl Martin, David White, and a Tom O'Brien show from 4 to 6. Thanks so much for being here, folks. Have a great trading session, a great day. Look forward to seeing you soon. Take care.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.